Hello, my name is Steve Bigelow with the Candlestick Forum. The markets are giving us a very obvious directional bias. We can see that as long as we're trading below the T line, we're in a downtrend. We have additional visual evidence that we're in a downtrend because we can see the downtrend. And we can see that every time they come up to a resistance level, they're selling it off. We just happen to have a very good resistance level, the T line that nobody else uses, and which adds great credibility to a sell signal occurring right at that level. You can see the Dow did a kind of a bearish doji sandwich, failure at the T line. What do we kind of expect from this next or this pattern setup? If they break through here, we've got wave one, wave two, wave three, implying more downside. This is what we call 2+2 analysis. When with one glance, you can see a multiple indicators telling you which way the market is going. Same thing over here on the NASDAQ. This is what we call candlestick analysis logic. But if you're in a downtrend, we know the T line works as a very relevant support and resistance level. We can see the bearish engulfing signal right here at the T line, a lower open on Friday, closed lower. Told us they weren't going up, they were still going down. That puts us in situations or puts us in trades that have high probabilities that we're going to be moving in the right direction. So we use that same analysis that if we can see a strong sell signal and a downtrend, and then if you took profits down in here, you could re-short because look at the indecisive bullish move. And that's basically what you get with a candlestick signal. You can pretty much identify the nature of the investor sentiment based upon the signal. Doji, 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 that told you that was very indecisive buying. And then when they slammed it, doing kind of a bearish signal confirming the dojis, that told us we probably had wave one, wave two, wave three, and you add that in correlation with the overall market, that the market is selling off, that just dramatically improves the probabilities of being in the right trade at the right time. So we've got the T line, which works very effectively. Even works more effectively when you see a candlestick sell signal. Look at your bearish flutter kicker signal, failure at the 200. There's your bearish kicker signal, failure at the 200, a close below the T line. This is what we call comfort trading, or I call comfort trading. Before candlesticks came along, I'm sitting here thinking, oh man, when are they going to turn this around and have my bearish trade go back up? Now I can say, shoot, this is a bearish signal. Let's go short. And as long as the market's trading down, and as long as this price is trading not only below the T line, but below the 3T line, you just sit here comfortably and profit from a short trade. Again, candlestick analysis logic. Nail, one of the ETFs for the home builders. There's your dark cloud. There's your bearish doji sandwich. What's this imply? There's more downside. So do you short nail, or do you just go to one of the stocks or the stocks in that sector and see which ones have the strongest sell signals and the biggest percentage potential to the downside? This again puts all the probabilities in your favor that you're in the strongest trades. Just using simple analysis, what's the ETF telling us? And can we find even better trades in individual stocks if that ETF is going down? The whole point of using candlestick signals is that if we can identify strong sell signals, like a bearish flutter kicker signal, that's kind of confirming a bearish J-hook pattern and telling us if they break through this trend, they're going much further. This is what allows us to be in high probability trade expectation setups. If you didn't short here, you could still short here with the confirmation of that doji sandwich. Now, do we want to be shorting here? This is what a lot of people ask. What we're really looking for is when the signal or the pattern is just starting. INTT today did a bearish flutter kicker signal. Probably implies there's more downside. And the fact that we can see they broke down through this resistance level just gives us that much more credibility the sellers are in control. So this is just simple candlestick logic. What are the signals telling us and what is the trend telling us? That same logic can be used in reverse, that if you're in a downtrend and you start seeing a pattern breakout to the upside and the markets are selling off, you want to take notice and say, well, something's got to be happening here, which usually implies there's something that has nothing related to the market in general of what's going on in that individual stock. So if you don't want to be 100% short, there are situations where if you're starting to see bullish signals and the market is selling off hard, investigate it a little bit more, see what's going on there. Bullish engulfing signal. After a spike up, consolidation, what did this tell us? Told us there was new interest, sold off. That interest may still be there, getting ready for the next move. This analysis uses candlestick signals to tell you what's going on in investor sentiment. This is what had changed my perspective on investing. After being a stockbroker for 8 years and still being one of the worst investors in the world, when candlestick analysis came along, it told me prices move not based upon fundamentals, but based upon the perception of fundamentals, or creates signals that tell us investor sentiment is changing. If you've read the books or you're reading the books, that's pretty straightforward, cut to the chase, what makes prices move. But what you also might want to do, if you definitely want to change your perspective of how to invest using the signals, which are not difficult to understand, join us. We're going to be doing a 2-day training, March 26th and March 27th. This is where you get all the nuances of why candles, let's go backwards. Which candlestick signals work the best? The 12 major signals, the 6 or 8 patterns that work effectively for showing what's going on in investor sentiment, and then going into the specific high ranked signals and patterns that are a combination of the signals and patterns. Your entry and exit strategies, your scanning for best trades, your stop losses, everything that is common sense built into candlestick charts we go through to kind of get the fear factor or get your emotions out of your trading. Join us. This is kind of the bread and butter of learning how to use candlestick analysis effectively. That'll be it. We'll see you in the chat rooms.